Hey, buddy.
Happy Friday, Pat. December 2nd for crying out loud.
Yeah. What happened to February, March, April, May, June, July, August, September, and October, November?
They flew by.
God, mighty, I know. Crazy.
Unbelievable. It's I think the older you get, the faster time flies. So it's flying pretty fast for me, but we want to welcome our millions of viewers and again remind people that we do this after kids are out of school. So that we don't interrupt the bandwidth. But I saw a feature on YouTube today, and it's probably been out there, and I never knew it existed until today. And you can do this on your desktop and your phone, but they build in chapters automatically. And if you take your mouse or on your phone, take your thumb, and you go down to this little bar here, and you just lift it up, look at that, voila, chapters.
Oh, wow.
So if somebody says, I only want to see Pat's charts, they can scroll forward to the charts and start there.
Oh, look at you.
And so you can do that on just about every video that's out there. And so I thought that was kind of cool. The other thing that I did, I put out a survey of our millions and millions of viewers, of which 116 voted. And I said, well, look, we have a busy audience.
Yeah, I know. They can't be digging around with surveys.
Yeah. Where will Arizona average home sales be at the end of 2023? And I meant prices. Somebody did ask me to clarify. That was great. 21% of you say flat or slightly higher. 21% again say down 10. The majority, 34%, say down 20%. 12% of you say down 30, and 13% of you is saying all hell's going to break loose. We're going to be down over 40%. But that's the breakdown of our audience. Yeah, Tyler, it's a cool trick. I bumped into it because I was trying to figure out how to work a certain tool, and the guy had an intro and this and that, and I lifted up that thing. I can go right to the stuff I want, right to the information. So I thought that was pretty slick. So anyway, that's kind of where the audience is. We don't have the majority of the people thinking that that housing's going to fall flat, but we're going to look at some numbers today, and I kind of wanted to start with the news of the day, and that's in your sandbox, and where we're trying to figure out where rates are going, and that's why this dollar's hanging right there. Right now, that's my dollar, because I don't think rates are going to get down into fives on the first quarter of next year, and you do. And if you're right, you get that dollar. It's going to be amazing. Payrolls and wages blow past expectations, flying in the face of Fed rate hikes. First question today, how open door inventory? Are they reducing the number of homes for sale? I'm going to check that inventory while I've got you on here. But Pat, tell us what happened today.
Yeah, we had private.
Let me preface it with a question. Here we got this great jobs report. It's supposed to be a good one. Isn't that supposed to make rates go up? Because it's, good news means bad news, right?
Yeah, good news means bad news. As you can see right here, this is the intraday trading today. We saw, it closed at 101.70, but we saw it down when the market opened up. We were down over almost 90 basis points, basically 90, right around there. The swings were crazy. As you can see here, we kind of started coming back up 63, up 77 basis points during the day. So it went from like down 80, 85 to plus 9. So we saw some pretty wild swings on the U.S. Treasury closed at 349. I thought this was kind of interesting too. As I'm going to break this down a little bit, I think I can't remember who said about the volatility, but we're seeing these spikes here. It's kind of interesting how you break it down. This is since say September 26. You get these spikes, then you've got, this spike here, this spike here, this spike here. I mean, it seems like, end of the month, middle of the month, it's middle to end of the month. You see how we had this spike November 10th, things kind of quieted down and we're just kind of quiet. And then we saw another spike here, a positive spike. So we're seeing some volatility during the day and during the week. But the jobs report came out, is better than expected. It's like 263,000 gain versus estimated like 200,000. But there's been revisions the last couple months. So, Barry Habib has been saying that, he's the numbers, the employment numbers. It's very interesting. I kind of go into his dialogue here. He was talking about how he said the BLS reported 263,000. He goes, and he went on to say about job creations components didn't make any sense and start contract to the ADP report that we received earlier this week, which samples 25 million payrolls. It says today's report showed 14,000 jobs created in manufacturing, while ADP showed 100 jobs lost. And he goes, today's report showed more than 200,000 construction jobs created versus 2,000 lost in ADP. So he said, I don't know how manufacturing, which is in a recession, and construction, which we know has been extremely slow, added jobs. And he goes, while this figure seems strong, it's not what it seems. And that's what we kind of saw in the trading today was, once you got the numbers, markets actually came back down here. I'll show you this one report here too. This one chart from Mortgage News Daily. Let me see if I can blow this up. I mean, obviously you saw the 10-year stocks went down, yields went up, but then as the numbers started coming out, they tapered off here. The yields started coming back down again. So it's been, boy, I tell you, it's been a wild ride, and I think there's gonna be a lot riding on December 13th and 14th when the Fed, you get the CPI numbers, and you got the Fed meeting December 14th. Right after that, there's going to be some interesting gyrations. But based on what Barry had said here, that if we see subdued CPI numbers, that you're going to see rates fall a little bit further.
So basically today, the job numbers looked like they were more positive than everybody thought, but the more you drill down the details, they weren't exactly that good, is what Barry's saying.
Yeah,
so, interesting.
Exactly.
Interesting. That explains the swing. I want to jump to a couple questions we got here, Pat. How's the open door inventory, and are they reducing homes for sale? They went down about 100 units from what I can see. And I'm not seeing, I scroll down real quick. You see where here it says active. I'm looking for price reduced. Here's one. It's a condo. So if I go real quick, there's a price reduced. Let me get up in there. There's a price reduced. So a little more this week than what I saw last week. And let's take a look and see. Here's one for 305 in Maricopa. And so if we look and say, well, how much did they reduce it? Let's look at the detail here. They went from original 420 to 305. If we look at the history here, it shows that they started out way back here in March at 420. Then they went to 412 at the end of March. Then 398, 394, 374, 361, and today they're at 305. Now Maricopa's getting beat up more than most cities because they've got to compete with all that new construction. So that's definitely what's going on down there. I'm gonna try and get down there tomorrow. I got to get a hold of our friend there and see if he wants to head down there and take a peek. Sean says, how do both rent prices and home prices go down? Shouldn't they be inversely proportional? That's kind of what I thought, but I think rent is going down because there's such a glut now. So there isn't this jump in inventory and single family residents for sale. There is, because they're not, new listings coming on are still coming on at a pretty slow clip, but multifamily rent is expanding like crazy. So there's apartments going up everywhere, and that's putting pricing pressure on. But that's just something we're just going to have to watch. I don't know.
This sounds too simplistic, but so multifamily like apartments have been growing. I mean, they have been going through the rough, correct? Right, like you just said.
Yeah.
Um, and this is just my simple mind. I'm trying. The train is at the stop station, so it's not running. We don't
Yeah.
have too many things going through my head right now. Um,
Good.
but if you think, I mean, this is just simplistic. But if you get an apartment complex, it's got, say, what's the average? How many units are in an apartment complex?
Well, it depends, but of the new ones, probably 250 to 300.
Yeah. So I mean, if you build a unit like that, 250, 300, 350 units, I mean, it's not just like you're not looking at one individual home. You know, what I'm saying? It seems like the swings, you got a unit that's got 350 units. You're going to, you start seeing a price reduction, and it's just everything kind of slides in that one whole unit. Does that make sense? I mean, there's, how can I explain it? Maybe I'm losing myself here.
Well,
Make,
I mean,
what
you
I'm
can,
trying to say is you got this one unit with 350 living modules in it. And
if you've reduced the price, you've reduced the price for 350 units. If you reduce a
yeah,
single family home, you
yeah,
reduced one. So
you clarified in my head what I was trying to explain.
yeah,
Yeah.
yeah, yeah. You got to get more gas in that train. Greg says, wife and I want to move back to Chandler area and purchase a home. When do you recommend I start this process? There's no rush. Greg, everything right now is rate driven. It's the other thing to watch too is, Intel did announce that they're going to have some layoffs. So, maybe stay close to that and see how big the layoffs are, because they're the big employer out there in the valley.
Well, I don't know if you
When I
especially would start the process. Typically, people will start the process of, as far as getting pre-qualified and stuff like that, a month and a half, 2 months. If your credit and everything is good, I mean, if your financial situation, if it's above average, you can start it, typically what, 40, 45 days, get, a couple weeks before you start looking.
Yeah, get all your ducks in a row.
Yeah.
Get with somebody like Pat and say, take a look at this and tell me what I qualify for. And
Yeah. Yeah.
I mean, he can have you up and running, ready to go in less than a week. Don't expect to call and say, what's my rate? Because there's a lot of different programs that he likes to look at and stuff. And
Well, I mean, too, the rates have been so volatile too. I mean, that's the
yeah,
thing.
yeah, today versus tomorrow. Tyler, it's a process, not a process. That get going on here. Let me show you a little bit about what's going on in the market here. This is the Cromford Demand Index and Supply Index. Even though it says November 1st, it's actually up to date as December 1st. They'll change that probably tomorrow, but we're still stuck here right in the middle. And that's kind of what we're seeing on prices here. Notice how they came down quickly, and then they just kind of stalled. But while that has stalled, there's more money being offered for closing costs and for rate buys down. So people have stopped lowering their prices and started giving away more concessions. And we're also seeing the contract ratio is way down here at 32%, and closings over list price now, pretty dim. Most of the closings over list price are in the 300 to 400,000 range, and the average is 5,000. Remember that used to be 20,000.
Yeah. Yeah.
So, and that 5,000, it's saying that the minimum was $1 and the max was 115,000. So where that's coming from is there's probably a home that somebody put out there that was really dilapidated, and investors, bid that up. But the other number that we saw this week was that investor purchases now in Arizona are down 49%, which I think is great news.
Oh yeah, totally. It's a lot of people
You know,
backed off, even thanks to the investors.
I did hear a
Well, you
statement
gotta give
today.
it to Frank. The freak gave you $2, so that's
Gave me $2, or is he betting me $2? I don't know.
He might be betting you $2 too. Yeah,
So
maybe he wants to get in on the rate action.
Yeah. Clear this up. Let's get this going. Then we'll have a meet and greet where we're just passing dollars back and forth. Hey, I'm gonna. Hey, Greg, you're welcome. Welcome. Thanks for watching. heard a statement today on a show, and it was great. And I don't normally watch a lot of the channels. I kind of go through and look at topic and headline and just kind of get a feel for what people are saying. But this was great. Talking about rate lock, I mean, staying in your home because you have a low interest rate. And Ken McElroy was giving an example of his brother. He goes, he's got a house in Seattle that he bought for 350,000, and now it's worth
3 million.
700,000. Yeah, just about. It's worth 700,000, but he's got a 3.5% mortgage. He said he doesn't want to sell that for 700 and go get another $700,000 house and reset his payment. He's not going to come out money ahead, even if he downsizes.
Mm-hmm.
And the guy he was interviewing said, here's the deal in the market right now. If you're sitting in a low interest rate loan, he said the home is worth more to the current owner than the buyer. That home's worth more to you sitting there with your lower rate, and it's more attractive to you as the homeowner than it is to the buyer, because the buyer has to come in and grab your home with that high rate, but you get to stay there with that low rate.
I thought that guy by the name of Pat McMasters was saying that about 8, 9, 10 months ago.
I'll have to look that back up.
Yeah, I could have swore that guy. I that's why, I mean, I'm telling you, I think that was, I mean, I was saying that. I like to know when I started saying that, but I started looking at that. I'm like, you got 40 million plus people that, and would you say 69% of people are under 4% or lower?
64%. Yes. Peyton here says, I know someone's got a 3-2 house at an $800 monthly payment. They'll never leave. They won't.
Yeah. I mean, I know I've been pushing that for like the last 8, 9, 10 months or so, but I just believe that once you got something there, you're going to have to go through hell in the handbasket to get out of that, 3% mortgage. I just don't see, and that's what I think is the big cushion in this market in terms of inventory and supply.
Well, the other one is too, and I just heard your alien land again. He was saying that investors won't dump their homes because of depreciation. They'll only get rid of their homes if they start losing cash flow. And they've had over 3 years of really good cash flow. So the smart investors are going to ride out whatever storm is coming. And he said, but they won't just get out simply because the value of the home is not worth what they paid for it or less. So in other words, they paid $400,000 for it. Now it's worth $350,000, but they still have cash flow. They're not going to care. It's like they've been paying down the note and making, $150, $200 a month off of it. There's still money ahead. So they're not about to bail.
That's why I think, I mean, like I said, seeing in July, if we see the Feds, if the rates do come back down again, I think you're going to see another, what you and I don't want to see is another kind of mini surge in prices. I think it'll just keep things firm. I still think that buyers are still in the catbird seat right now for some time.
Well, yeah, I think so too. And Tyler's asking, what do we think on that survey? Where do we fall? If rates stay in the 6s, then I'm in the 20% camp, Tyler. If they come down in the 5s, then I'm in flat to 2 to 4%.
Yeah.
But I'll also say the one thing I can guarantee is insane volatility. At what mortgage percentage you need to get people to sell in 2023? They're only going to sell if they absolutely positively have to. If you're sitting there at 4, I mean, they just have to do the math. If home prices go down and they have, they see an attractive house and rates are now more reasonable, and they can make a decision for themselves that it's a good move, even though their payment may go up a little bit, then they'll do it. But I don't think it'll happen in mass.
I mean, if you saw rates come down into, I think I'm just kind of speculating here, just off the top of my head. But if you saw rates in the low 4s, high 3s, low 4s, I mean, we saw, you and I looked at watched that one YouTube channel where that gentleman was saying that he's saying the Feds are going to knock the back to zero again as far as the federal funds rate. But
yeah, and that's because of this, isn't it?
Yeah.
I mean, the inverted yield curve is
inverted yield curve.
Down to where it was in 1980, but it's certainly not in good territory right here. So that is signaling a recession.
Yeah, you can only go off of past history of what's happened before, and it's obviously, something different could happen, but history has a tendency to repeat itself.
Yeah, and if this chart says anything, it says, well, every time we have an inverted yield curve, we do get a recession. The dip in the curve versus the um, length and size of the recession aren't necessarily correlated, because you can see here we barely went down here, but that was the housing crisis there, so that was a huge problem. But down here, this was 2001 we had a recession, and the yield curve was inverted the year ahead. So all eyes are on that, and I think that's what that YouTuber was talking about when he
Yeah,
was saying that in his opinion, um, the Fed overshot.
yeah.
And
Well, if
I
you think
think,
about,
I mean,
but
isn't that kind of what Barry's saying as well?
yeah, Barry's saying they're going to overshoot. That gentleman on the YouTube said they're overshooting. I'm kind of going off the fact that they've never been right the last couple of years, so kind of putting my bet on that. But I think they're obviously bumping up 50 basis points, and then, like I said, December 13th and 14th, the next. Well, that's that was a couple of weeks away, but it's next about a week and a half away. Excuse me, but it'd be interesting to see the volatility in the market. But to go back to that, there's got to be some type of inflection point where if you're a seller and you're at 3%, but rates do go down, what you got to just ask yourself, where would I be comfortable if rates got down in the, low fours? I'm at 3. Okay, I've got a couple $100,000 equity in house. It's not too painful. But when you're in a 3 and rates are at 6.5, 7, you're not going to make that trade. There's no doubt you're not going to make that trade.
Yeah, they did keep rates too low for too long. There was way too much spending going on out there. There's no doubt. Hindsight's 2020. We're looking at 19,100 listings today, Pat. They're starting to climb back up, and I can see here that that blue line is new listings coming up. So we're coming up out of Thanksgiving, just like we did last year, and so we're gonna come up a little bit. Sales dipped as low as 1,700, and but they're going to come back up, and then we're going to take a major hit again over Christmas and the New Year. We went through technical recession, but we are exiting it. So I hope we are exiting a technical recession. Need to keep rates over 6% for 2 years. Greater minds than me are going to be looking at that. But I think if we're looking at our market right now, the gap between, and that's what I like to measure here, Pat, is the gap between the number of new listings coming on and the ones going under contract. When it's close, like it is here on the right, prices are not going to go down. It's like 80% of the homes are getting gobbled up. When the gap is huge like this in the middle, that's when prices start climbing down. And this was May. So they started going way down. And so as you look at this very simple little spreadsheet, if this line keeps going up, 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 and this line even stays where it is, then you'll see prices come down. Then the distance between the two will determine the severity. So just simple supply and demand math.
Are those the numbers that you're plotting? It comes into a chart?
Yeah, I take them right off the MLS. So what I do is I go in, and I'll show you right here. I go into,
this is like a proprietary chart for you then, huh?
It is. It's I'm the only one that has that. And you can see that I've made it.
Have a hook for people.
Yeah, it's really it's fancy too. I mean, I could probably sell it and retire. But I won't, because I'm here to share. And so I add up new listings 2107 and back on market, which is 630.
Don't give everybody away your secret. Totally. Keep it.
Yeah. Well, there's no real estate agents watching. Then I cough. Then I add up under contract, accepting backups, contingencies, and pending sales. And then I just take a peek at price changes. They were running about 6,000 over a 7-day period. Now they're at 3787. And then I look at expireds. Expired spiked back up to 716 because it was the end of the month. Nothing alarming there. So that's my secret sauce. So I just put that in the spreadsheet. It kind of helps me get grounded in the numbers of what's going on. Then I like to look at how many vacant homes they are. The only threat to housing market's a strong recovery. in the stock market. Investors will sell if they have fear of missing out. Michael here says rent is determined by supply and demand, not what the owner's paying for the mortgage. Some landlords right now are dealing with negative cash flow. They are feeding an alligator. Yeah, some of them didn't do the homework to give themselves a bit of a cushion. Thought they could keep raising rent over and over again, and renters are pushing back.
Mm-hmm. Definitely. Just a quick update on the lending side, just to jump up. The FHFA Housing Authority changed the loan limits for next year. FHA now they bumped it from 440,600 to 530,150 for FHA. So it means on FHA you could buy a house up to 549,000 with 3.5% down, and on the conventional side they bumped it from 647, it was 200 to 726,200. So it's about a 50, about a 75,000 give or take bump in. So 726,200 is now the new conforming limit before you have to go above jumbo.
So I'll rush out and get one of those tomorrow.
Yeah.
Pat, what's my rate?
So just some news on the lending side I thought I'd throw in there real quick. So
hey, I got to meet with one of our subscribers today, Scott out of Minnesota. He's a real estate agent in northern Minnesota. So I met him out. He's down in Apache Junction. They're staying out there for about a month. They're going to be here through Christmas. Said he kind of wished he could be here for our little party that we had down there. I said, well, you never know. We might throw another one. So great guy. It was fun to talk about his business out there and going through the same thing out there that we are here. Only it's incredibly slow out there right now because they're getting the double whammy of rates and weather.
Yeah.
So
nobody wants it when it's 20 below. You don't want to be looking for a house.
Well, you're going to look for it. You're going to look for it online.
People complain about during the summer when it's 115 here, but I'd rather look for a house at 115 than 20, 25, 30 below. So.
The only thing I don't like is unlocking a house during monsoon season, and you're bending down to get the key out of the lock, and all of a sudden the clouds open up, and all that rain comes off the roof like Niagara Falls, and you're just soaked. It's like, come on, lockbox, open. So you try to dive in real quick and push the button, stand back and wait, and then dive in to get the key. And the other day, last weekend, fortunately it wasn't raining, but the lock boxes have a little thing on the bottom that you push up and it activates the Bluetooth, and then you open it with your phone. Well, it wouldn't push up. It was stuck, which meant the key was stuck in there somewhere. So and it's still hanging on the pipe, right? So I took the lockbox and I turned it upside down and I just went bang, 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 bang. And then I hit it and then it was loose. And then when I pulled it out and I could see the key was in there sideways, it was stuck. And I thought, there's nothing worse when you're a listing agent and getting a call saying, I can't get in the house because I can't get the key. There's something wrong with the lockbox. And you drive down there and open it and just see that some agent stuck it in sideways instead of putting it in the way they're supposed to. So, the hazards we have.
That's why you make the big bucks that you do. I don't know how you do it day to day. Unbelievable.
Now, I'll let the audience know. Yesterday, it just shows you kind of how quirky YouTube is. Yesterday, I made the comment because Jackie's been sick and she came back and I said, I'm following CDC guidelines. I put a mask on my sound bar because Pat, you were talking with somebody on the phone a couple of months ago, and then right after you got done hanging up with her, you got sick. So we've been joking about how germs spread through the internet. Phone. And so I said, I put a mask on my sound bar. There is a comment. It's held for review. You're never going to see it. YouTube does a really good job for me. I've got certain keywords in there. If you swear, it's not going to show it. And man, they just went on this mask rant. It's like it had to be 10 minutes of typing. Like, move on. I'm sorry. I just said I'm done with masks.
We're not trying to hurt anybody's feelings on this channel.
Yeah, we're not trying to do that. So just if I say something that seems like it's a little out of whack, just move on. I got thick skin, but when I read things like that, I just roll my eyes. Like, wow,
exactly.
Really? I get some that are pretty crazy. Well, Pat,
Next week is going to be a quiet week on the front because the Feds are in quiet mode now before the Federal Reserve meeting. But I think it's interesting. Things are rotating down a little bit, rolling over. In terms of inflation, I think Barry thinks that might see a more subdued CPI number come a week and a half from now. So it'll be interesting.
Yeah, no doubt. And we'll see how giddy everybody is if rates start to come down again. But I'm going to leave the dollar taped right there. Okay. And now if they come down in December, Pat, you don't earn the dollar. I'm talking first quarter. If they're down below 6 January 1st, then I will hand you the dollar.
All right.
It'll be a little bit of technical wizardry too. So
yeah, exactly.
So we're going
to.
All right. Have a good weekend, Pat.
All right,
Thanks
buddy.
to our millions and millions of viewers. See ya.
Bye.